In this presentation, we will take a look at the customers section or the sales cycle or customers cycle within QuickBooks Online. As we take a look at this within QuickBooks Online, we will compare it to QuickBooks Desktop for a few different reasons. One is that some people may be more accustomed to the desktop version. So if we see things on the desktop, we can then go to the online version and give the comparison of the related items that will be found in the online version. The navigation will change a bit. The other thing that's great about the desktop version is they provide this flowchart, which helps us to connect all the items that are typically in connection within each cycle, such as the customer cycle or sales cycle. Once we know this flowchart, we know the connections, then we don't really need the flowchart anymore. But as we first learn it, it's a useful tool. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We're going to look through the components by going to the QuickBooks Online test drive file, so you can actually search the test drive file and see exactly what we are looking at. Here we are in the test drive file in Greg's Design and Landscaping Services. Within the first page or in the home page of the online version, we see this information. We see some invoices up top, some expense information, bank account information, profit and loss, sales items. When we actually navigate through this information or enter data into the system, the primary tools to do so are going to be this item up here, this little plus that turns into an X. We'll see the customers, the vendors, the employees, and the other. We here are going to be concentrating on the customers section. So we're going to look at some of these items, some of the main items within the customers section. Note also that there's a navigation pane over here. You got these three little bars, which is called a hamburger, I believe, which you can close up to get more screen time, or you can open up. Note also that you can hold down Control if you're on a Windows-based computer and scroll up to zoom in and out to 120% now, back to 100%. That will minimize the screen and adjust the screen as you go. So if we do that from time to time and your screen looks a little bit different than this screen, then it's probably because of that type of zooming function. Note that also on this side, when this is open, remember you can close this with the hamburger. So once we open this up, you have some more navigation items on the left side. So these are going to be the two major navigation tools. We here considering some of the items that are in the sales navigation items, so we can have a few different ways to get to some of these same items that we will be considering here in the customers section. So I've gone back up to the dashboard here. Now note I'm going to hit this plus again and go make it an X. And then over here we've got the customers. These are the items we're looking at, but we can't really see the exact flow chart when we look at these items. So it's nice to see the flowchart in the desktop version. We'll consider that, and then we'll jump back over here. So we'll go take a look at the desktop version, not the online version, just so we can see the flowchart that's provided on the home page there, and then give some comparison. That'll help some people that are converting possibly from the desktop version, and it'll just give us a flowchart too, so we can see the connection between these items under the customer field. So this is the desktop version, again, not the online version, just showing the flowchart. So the items within it will be much the same because they're both QuickBooks software, but the format, the layout of it will be much different between the two versions. This is going to be the home page. Note that we're breaking things out between vendors, customers, and employees section. Really useful to do that. Both online and on ground does that in its own way. The reason it's useful is because that's usually how we think of the cycles. So when we think about accounting, we know that there's a cycle of monthly cycles, yearly cycles, but there's also kind of a cycle within each section, meaning the sales cycle includes us, purchasing if it's inventory, and then selling the inventory on the sales cycle, having an accounts receivable, and then receiving from the customers. The vendor cycle includes us having a bill typically in accounts payable and then paying the bill. Employees has its own cycle as well. And oftentimes within accounting departments, the larger the company, the more likely it is that we will be working in solely one of these cycles and possibly only in one component of these cycles as we specialize. As we work in smaller companies, of course, we will take care of all of these cycles because there won't be as many transactions in any of them. but we'll have to still think of them. It's useful to think of them all as their own little processes, all as their own connections as we go through the data. So in the customer cycle then, the major components here, we've got the estimates. We're not going to be considering the estimates too much here. That will be in particular types of industries that we would have an estimate first. Then we're going to be looking at the invoice. The invoice is going to be a crucial document that we will take a look at often. And the invoice is going to drive the transaction. So when we enter the invoice, we're actually entering data into the system. We're entering financial data into the system. There'll be a journal entry related to that data entry in the system. And we'll talk about that in a second once we get back to the online version. And then once we invoice, that means that people owe us something. People owe us money. That's when we bill someone for the job in essence. Then we're going to have the receive payment. That's when we're going to receive payment. And we can imagine in this cycle that we invoiced something, billed a client for something, expecting to receive a check in the mail. Then, of course, we receive the check in the mail. So now we've got the cash. In typical accounting processes, then we would take that cash and we would debit cash or increase cash and reduce the receivable. That would be the normal thing. But QuickBooks oftentimes uses an account called undeposited funds, and that's kind of a holding account. That's going to allow us to hold the money that we have on hand but isn't in the bank account. So here we're going to increase the undeposited funds, hasn't gotten into the bank account. Then we take all the undeposited funds we have, all the cash we have that we have not yet entered, all the checks, and we go and deposit it into the bank, which is now in the banking section, but kind of related, as can be indicated by the arrow, to the customer section, at which time we deposit it from the undeposited funds, kind of a cash account, but put it now into the bank account, depositing it into the bank account, and then reducing the undeposited funds. This is the normal, when we think of the full customer cycle, this would be the full customer cycle we would typically think of for most companies. However, it's quite possible that some companies don't do the full invoice process and are on a system where they basically receive cash or payment at the point of time that they make the sale. In that case, we're not going to use a create invoice. We're going to use what QuickBooks called a create sales receipt. And you could think of the sales receipt as kind of like if we were at a check register and we just created the receipt at the check register. We got the payment right then and there at the check register. We create the receipt right then and there. And so this would be on a point in time that we're getting paid at the same point in time that we provide the goods or services. So you can see within the flowchart then what happens is we get a straight connection. We skip these two items, these two steps. There's no accounts receivable involved. We get the money. We can imagine it in a check register. Then at the end of the day, we take that check register and put it into the bank. So in other words, sales goes up here and the other side goes into not the checking account or not cash necessarily, a type of cash account, undeposited funds. Then we take those undeposited funds and go to the bank with them, depositing them in the bank. Those are going to be the major items within the customer section. Let's go ahead and take a look at those major items within the online version now that we've seen the flowchart. Here we are back in QuickBooks Online now. We're on the dashboard. We're going to go back up to this plus item. And now, once again, we could see all the same basic information, all the same items, the components we saw in the home page now under the customer section. And we can kind of imagine, hopefully picture what those connections, what the flowchart basically looks like. So the main thing that we're going to have for customers, the initiating document, is going to be the invoice. Many businesses really use QuickBooks a lot just for the invoicing process, to be able to invoice the clients. So if we select the invoice, that's going to be the first item, the first starting component. Of course, this is only the first starting component if we're in the type of industry where we do work and then bill the client. So if we're in a service industry like accounting or like some type of service provided industry where we do the work and then we bill the client, in this case landscaping, if we did the work and then billed the client, then they would pay us at a later time. However, if we had a policy where we did the landscaping and we only do it if we get payment at the point in time we do the job, then we wouldn't be using the invoice. We'd be using the sales receipt. So the invoice is our bill that we're going to mail out. And so the invoice will look like this. We're going to have the customer that we choose, the customer. We have the emailing information. The emailing is nice because we can email from QuickBooks. Then we have the billing information, where it's going to be sent to, or the address. We've got the terms, when we expect it to be due back by. Then we've got the invoice date is going to be automatically populated typically as we enter the data. And then we have the due date. Note it's going to be in accordance with the terms of the invoice. And then we have the products and service down here. This is where we're going to enter what we actually did. If we select the drop down, you'll see that some of this stuff is already populated. And if I select any of these items, we're going to say, oh, okay, there's garden lighting that we have there. And we'll see the quantity is 1, and the rate, they don't have a rate right now. It's taxable, so we would have to input the rate at this time. Sometimes the rate will be there depending on the items and how we have set up the items. So you'll note that these items that we have here are pre-set up. We'll have to talk about how to set these items up. And that's one of the things we'll do when we put in new data. So we got refund and allowance. We've got SOD. We're going to have a rate of 30. And if we had 2 SOD, then 30. So there's $60 on the SOD. Let's go ahead and choose a customer. If we add a customer up top, then we'll have the customer information. When we send this, then the invoice will drive the transaction. It'll actually create the journal entry. It'll create the financial statements. It'll create the debits and credits for us. Everything has been set up, driven mainly by this product. This product is the driving factor, and we'll have to think about how to set up the product. The journal entry for this is going to be something like debiting accounts receivable, increase in accounts receivable, the account showing that Amy owes us money. The other side of it is going to go to sales, some type of income account for the sales price. And then if there's any cost of goods sold, if we have to buy the SOD, of course, and then sell it, it's also going to record the cost of goods sold, expense account, and the decrease in inventory related to that cost of goods sold. It'll also have to deal with the sales tax. So the sales tax is going to be here if it's applicable. In this case, we're saying it is 8% sales tax. So note we're going to bill the client for us sales of 60 plus the 480 sales tax. So the total bill will be 6480. So our sales will go up by 60, and we'll have a sales tax payable that will go up by the 480. We'll talk about that in more detail a little bit later as we start entering data. Just note, in essence, the invoice is going to increase the receivable, increasing what Amy owes, and then it's going to increase sales or revenue. Now we're just going to hit save, so we'll save that item. The next thing that we would typically have, if we select this plus item, we'd say, okay, we invoiced someone, now we're going to receive a payment. We're going to imagine we received a payment in the mail. We got a payment in the mail, we got a check in the mail, so we're going to say received payments then. And we're going to select whoever we received the payment from. So we're going to say, okay, we received a payment here. And within this field, we've got the payment method. So we can have the method of payment. We're going to say a check. Reference number would be the check that we had, not a required field, but nice to have. Note it's going to undeposited funds here. That means that we're taking it to an account that is not the checking account. It's a cash account, kind of, but it's a holding account because we have the check. It's not in the bank account yet, and therefore not going to the checking account. This being a thing that always, or a step that many people have problems with, is undeposited funds account. How do we group these cash payments together as we enter them into the bank account? So just be aware of that as we go. You could go directly to the checking account, deposit it there. You just want to make sure that as you deposit it, we group it in the same format as will be shown on the bank reconciliation or bank statement to reconcile more easily. And so we'll talk about that as we enter the data input at a later time. But here's the invoice, so we can check the invoice off, and it'll automatically put the payment amount. If we got something paid other than the $64.80, we could put some other payment amount, and then we could say save and send and enter that data. So what that'll do is it will increase the undeposited fund and decrease the accounts payable, the account showing what is owed to us by the customer that we had billed. The next item that we would typically have if we select the drop down is going to actually be a deposit. And the deposit, you'll note, isn't in the customer section. And this is what's a little bit tricky about the online version, the way it's kind of just laid out in a list, because note there's some overlap. If we look at the desktop version, back to the desktop version, note we're in the banking section, but they kind of connect the record deposits to the customer section. Why? Because we're hoping that most of our deposits come from sales from customers. So it's kind of related, but of course we could have other deposits from us as the owners or from loans or something like that. So we're going to go into over here in the deposit section, bank deposit, and we're going to take it out of undeposited funds now, and we would then put it into the bank. So we would say it's going to go into the checking account typically, date of the deposit, and then we would check off the deposits that we have. If we have this deposit and say another deposit at the same time, we can deposit them both at the same time, and that helps us because that'll make sure that our records match what will be shown on the bank statement. So we can tie them out. We could check it off and check off that everything happens. So we could check those off. This would be the total deposit, taking it out of undeposited funds, putting it into the checking account. So I'm going to close this item out. That would be the normal process if we go through the full kind of normal process for the sales. However, as we discussed before, it's quite possible that we make a sale and we get paid at the same point of time as we make the sale. So imagine here that we have the cash register. So we're at the cash register and we're making a sale. We're not going to send an invoice out from the cash register. We're going to get paid at that point in time. And we don't need to go through accounts receivable. In other words, they're not going to owe us money. We're going to go directly to the sales receipt now, which will skip the accounts receivable portion and the receive payment portion, go directly into undeposited funds and revenue. So if we had this item, we're going to say, all right, now we're going to say that we had a receipt, sales receipt, date, billing, payment method. We can say, all right, cash on the payment method here, reference number. We don't have one. Once again, similar information as the invoice, putting it into undeposited funds. You're imagining here that we have a check register or cash register, and we're putting all the money into the cash register. Then we're going to go to the bank later on and deposit it. So we want to make the deposit as everything at the end of the day. We don't want to deposit piecemeal as we go into the checking account because it won't match, our records won't match the grouping that will be put into the bank. And then if we were to find something, we're going to say gardening. Once again, these service items are something we'll have to set up. We'll talk about how to do that at a later time. Note, once they are set up, how easy it is to enter this information. We can enter this information very easily into the system once it has been set up. And that's the point. If we get this stuff, setting this stuff up properly, then we can let the data input be very easily. We can have someone else do the data input and have that process be as easy as possible. Us in the designing of it want to make it so that that is the way it is, so that the entering of the data is as quick and easy as possible. We don't need to know debits and credits. We don't even need to know what landscaping gardening is. It's all set up. We just need to know that that's what we need to choose. And even the rate will show up oftentimes if we input that into the system in that format. Sales tax, we're saying, doesn't apply here. So we don't have any sales tax, and it just depends where we are and what we're doing, if there's sales tax or usage tax. And so that's going to be our item. So what's going to happen here? We're going to increase what we got cash into undeposited funds, however, not into the checking account, and increase sales or revenue. If there was something with relation to inventory, we would increase cost of goods sold and decrease inventory. If there was sales tax, we'd have to deal with that too. So, but mainly, just think of a service company for now, and we're increasing cash and we're increasing sales. And so we're going to say save this item. And then once again, we would go to the second component. Remember, we basically took a shortcut. Let's go back to the home tab. Then we took a shortcut on the flowchart. So the first line was this: invoice, receive payment, deposit. Now we took a shortcut: create sales receipt, record deposit. So now we're going to go to the record deposits, hitting the plus item here, and then we would go to the bank deposits, and once again enter the information into the checking account for the cash that we got in that case, and we would group any cash together at this point, grouping together, taking it out of undeposited funds and putting it into the checking account. Those will be the main functions. Now note over on the left side, once we have this hamburger open, if we go to the left side and we select the sales item, we have some of the same information that we have, and we could create invoices from some components here. So we're on the sales tab. Then we have the tabs up top being the overview, the all sales, invoices, customers, and products and services. Income over time. In the overview, we've got some shortcuts and informational information. If we go into the all sales, then we see detail related to the sales cycle. So we've got the detail. We'll go into this more in depth at a later time, but we've got the estimates made, unbilled activities, overdue activities. So we give some groupings of our information. And then we're going to see the types of information. We could sort this by different types up top. And the major items that will be included here will be the sales receipts, which we took a look at, the invoices, which we took a look at, and the payments that were received, which we took a look at. So that's the typical thing that's going to happen with the sales cycle. We're going to invoice, and then we're going to get a payment for the invoice, or we're going to have a sales receipt where we get paid basically at that same point in time. If we go then to the invoices, we see a list of the invoices. We get some nice groupings up top again. The overdue, not yet due invoices, not deposited, deposited invoices. So we can go down and we can see some detail within this section related to the invoices. We can go into different types of groupings within the invoices. We'll take a look at this in more detail as we start to enter data into the system. Then we have our customers. So this is going to be the customer's information. And we can see our customers listed here as we select a customer. Two tabs here. We've got the transaction list, the items that happen, invoices and payments. We've got the customer detail, which will give us the detail for the customer information. And we can enter customers in this item as well. If you go back to the sales item, you can then scroll through this information to the particular tabs that are there and go back to the prior screen. So here we are in the overview, all sales, invoice, customers once again. And then we can go to the products and services. And this is where we're going to enter those really crucial products and services that are going to drive that we saw in the invoices and the sales receipts. These are really where the data input is going to be input and make the process of just input. This is what's going to drive the data input. It'll make the data input a lot easier if this products and services is set up well. For more accounting information and accounting courses, visit our website at accountinginstruction.info.